Welcome back. In this part of the series, we are completing Schedule 2, the IRS form for any additional taxes that do not appear directly on Form 1040. We will explain what most of the line means and fill in only the ones that apply to David. So this is what David has, and the boxes in red is what is going to go on Schedule 2. Alright, so here's Schedule 2 that David filled out. Line 1A is for repaying premium tax credit from Form 8962. David owes $800 back. Line 1B is for repayment of the new clean vehicle credit if you transfer the credit to the dealer and failed the holding period rules. David claimed the normal Form 8936 credit for his 2023 Tesla Model Y. He did not transfer the credit to the dealer, so line 1B stays blank. Line 1C is repayment of the previously owned clean vehicle credit if you transferred it to a dealer. David did not buy a used clean vehicle, so line 1C stays blank. Lines 1D through 1Y are just extra write-in lines for other additions to tax that comes from different forms. These are things like recapture of education credits, adoption credits, home buyer credit, or business and energy credit recaptures. David does not have any of those, so every line from 1D through 1Y stays blank. Line 2 is the alternative minimum tax. David's AMT came from Form 6251. And just a reminder, I'm not going to cover every single form or schedule in this series because it would make it too large. I'll only focus on the ones that I think are important for this series. His AMT is $2,500. Line 3 is the total of lines 1 and 2. 800 plus 2,500 equals 3,300. This goes to Form 1040, line 17. And that completes Part 1. Part 2, other taxes. Line 4 is his self-employment tax from Schedule SE. David's Uber and DoorDash profit generates $1,944 of self-employment tax. Schedule 2 always gets the full self-employment tax because this is the actual tax you owe. Only half of that amount is deductible, and that half goes on Schedule 1, line 15, as an adjustment to income. So Schedule 2 gets the whole $1,944, and Schedule 1 gets the deductible half later. Lines 5 and 6 are for unreported Social Security and Medicare tax. These do not apply to David. Line 7 is the total of lines 5 and 6. David has neither of these, so lines 5, 6, and 7 are all blank. Line 8 is additional tax on IRAs or other tax-favored accounts. David's $2,000 HSA distribution was fully qualified. His backdoor Roth has no penalties, so line 8 stays blank. HSA is like a lifetime medical IRA with triple tax benefits. FSA is a short-term employer medical fund that reduces your W-2 wages. Neither one creates additional tax for David because his HSA distribution is qualified and his FSA was handled through payroll. Line 9 is household employment taxes. David doesn't employ a nanny, caregiver, or housekeeper, so line 9 is blank. Line 10 is repayment of the first-time home buyer credit. David never claimed this credit, so line 10 is blank. Line 11 is additional Medicare tax. David's wages are below the married filing jointly threshold, $250,000, so line 11 stays blank. Line 12 is the net investment income tax, also called NIIT. This tax only applies if two things are true. You have investment income, and your income is above a certain threshold. For married filing jointly, that threshold is $250,000. The IRS charges 3.8%, but not on the whole income, only on the smaller of your total investment income or the amount your income exceeds the NIIT threshold. So it's basically a whichever is lower calculation. In David's case, his stocks, dividends, crypto, staking income, and rental income add up to about $47,000 of investment income. Multiply that by 3.8% and you get roughly $1,786, which rounds up to an even $1,800. Staking income is like earning interest on your crypto. When you stake your coins, the network rewards you with more crypto, and the IRS treats that as taxable income. So basically, if you have investment income and your overall income is above the IRS threshold, you pay a flat 3.8% on the smaller of your investment income, or the amount you went over the limit. David's investment income puts him at about $1,800 of NIIT, so that's what goes on line 12. Lines 13 through 20 do not apply to David, and finally line 21 adds up all the extra taxes David owes, things like self-employment tax and the net investment income tax. For him, that's $1,944 plus $1,800 for a total of $3,744. And that completes Schedule 2. In the next video, we will move on to Schedule 3 and cover the credits that reduce David's total tax.